Previous 1 hour here with something very interesting that was able for me to understand, and that's generating an income through investments. Because as an inventor, I had also to become an investor. And interestingly enough, I believe that the dollar is going to be devalued real soon because of the recession and other things that are happening in the world as we speak. But of interest is silver and gold, and let me tell you why. Remember, as an inventor, I need support financially to maintain the project. So I looked at the historic value of silver, and one must look at the historic value as a true ratio of 16 to 1, noted as 16 meaning that 16 ounces of silver would buy 1 ounce of gold. This ratio was originally created based on the supply of silver and gold from the earth. This is not to be confused as the current trading ratio, which is merely a representation of current trading prices, which in itself is often a definition of the undervalued metal, silver that is. During the most recent recession, gold-silver ratio hit 84.4, the highest level in 4 years. Now, I don't know about you, but I look at things that change radically over a period of time as a cycle for change. Currently, the ratio is around 50. This signifies an extremely overvalued gold to silver ratio, although working its way to the true ratio, and this in itself represents a definite time for investors to buy silver. Sure enough, investors who trust this ratio have profited from eventual return of gold-silver ratio to a more normal level as recession waned in 2009. Silver ratio was at a normal level, and this has been the pattern historically, especially over the last decade, with the main events causing market volatility being the dot-com and real estate bubble problem solver. Should I buy silver, you ask? Many investors ask that same question. Should I buy silver over gold? Gold always takes the headlines, and very few people are educated about the history of silver-gold ratio and even what securities are as far as purchasing in order to buy silver at a devalued price. The short answer is to watch the silver-gold ratio, and when it stretches far from its historical average, especially in times of market volatility, an investor may be better off buying extremely undervalued silver. I'm not going to go into any more detail because I think it speaks for itself. But if you want more information in writing, you can send away for some information that's free, and I can get that to you. Just look for my email, Mobius1r at yahoo.com. That's spelled Mobius 1r at yahoo.com, and I'll send you a free report on silver and how that will then benefit also gold. Very brief video on this news for you to capitalize on the silver and gold market. Thank you for your time.